Hi everyone, today let's talk about the Finamized strategies and how they played out in Q3 and what we are going to see from them for Q4. And then of course we'll go over all of the longer term charts as we head into this next week of trading. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Finamized strategies for Q3, they all were pretty good. Let's take a look at them. We have the Easy Rider Momentum and Sector Momentum Edge strategies. What have they offered? What were they doing this quarter? And you can see Easy Rider up 17.3% and 17.5% this year. So pretty much all of the gains for the year were in this quarter. Slightly behind global stocks, but having seen some smaller drawdowns than the rest of the markets. So a stronger risk-adjusted performance. Momentum Rider still continues to do really well. This is one of the ones that I think I might try to emulate. At some point in the future, we'll take a look at the sectors that they like going forward. Again, much lower volatility, picking the sectors that have the best setups and riding those for the quarter. And then Sector Momentum Edge up 13.5%, lagging the S&Ps but still doing okay. And then Trend Filter applied to that Easy Rider portfolio returned 8.4%, again with lower volatility since May. So part one, Easy Rider portfolio, what does that look like right now? 60% stocks, 20% bonds, 10% commodities, and then 10% alternatives like gold and Bitcoin. Can certainly include gold in that kind of commodities sector, but they do have a diversified commodities ETF that they're using for that. Otherwise, it's pretty much just as broad as it can be in terms of global stocks, bonds, basically TLT, plus some international treasuries. And then those commodities and alternatives, you can see everything was good this quarter. And then you can see it here, global stocks outperforming a little bit, Easy Rider portfolio still doing well with a little bit smaller drawdowns here. Again, not bad, nothing revolutionary here, but it's a decent place to start for most people. The one that I do like though is the Momentum Rider portfolio. This did extremely well. Part of that is because gold and Bitcoin did really well, so those are kind of skewing the gains to the upside a little bit. If you take those out of it, it's not quite as good. But you can see here max drawdown of just 2.3%, completely sidestepping that pullback in April. Volatility running pretty low. In terms of what they got right now, gold still holding really well. Looks like they've been adjusting this on a monthly basis, which is a little bit more aggressive. I thought they were doing these only quarterly here, but you can see US stocks, developing markets 24%, emerging markets 24%, and then gold and then Bitcoin 4%. So overall, doing really well. Bitcoin again adding a lot, gold adding a lot. Without those, I don't think it would be nearly as good. You can see gold shares year to date really good on the returns. And they do mention it here, gold bringing a bit of balance. This is a risk on setup, they say here. But if those winners start to lose momentum, this portfolio could absolutely take a hit. So you just have to kind of keep it in mind. Maybe that's why they check it on a monthly basis, just to make sure that everything is in shape. Otherwise, Sector Momentum Edge, do like this one as well. Again, not quite in line with that kind of Easy Rider or Momentum portfolio, but this is where they kind of look for the best sectors. Again, underperformed a little bit this quarter, but communications has been doing really well. They had a bit of a hiccup where they put on consumer discretionaries, which was pretty terrible early in the year. Tech otherwise doing really well. Industrials, maybe. Utilities has done well. I think that's being overlooked a little bit here. Right now, what they're at, tech, industrials, and communications are their three plays for this next quarter. And they say part of the reason this strategy is lagging a little bit is that you kind of have to look for these sectors that are starting to move up, and there's a little bit of built-in lag here when you have those kind of turning points in sectors. So you kind of have to watch where are the trends, start to catch those new trends on the sectors that are doing well, and then make those changes ahead of the moves. And here are their plays right now, XLI, XLK, and XLC, all at 33%. They pick the best three setups across the markets. And right now, that's what they think is best. I do wonder that if this strategy is only adjusted monthly, if that's part of the reason that it is lagging a little bit. They say you have to look at it and rebalance every single month, but some of those pivot points could be kind of intra-month, so maybe that's part of it. They say the portfolio is doing well, and it is a little bit interest sensitive, they say, but assuming that there's no recession, this should be in good shape. And they do mention it is a little bit tech heavy, which seems a little bit risky right now, but that is kind of the play. You're looking for that sector momentum edge, stripping out the noise, and if the sector is doing well, then it goes into the portfolio, which is what they're doing right now. So tech, have to be in it, continues to do well, but like we'll talk about on the charts, I do think tech is starting to slow down a little bit over the last couple days. Looking at fear and greed, we really did not move very much this week at all. 54 from a 53 the previous week. Very slightly choppy here, kind of in the middle of the range, not showing clear direction in either direction. Market momentum, neutral, strength in greed, breadth. Breadth has been a little bit funky. It says fear here, but it did move higher on the end of the week price action. Put call ratio came down, kind of cooling off some of those fears that we were seeing on that kind of ramp here. And then volatility has been moving higher. We've been talking about it on the charts, and we'll look at it again later. Safe haven demand moving higher. Of course, stocks have been doing well over the last 20 days, and then junk bonds had a bit of a spike here, and you can see we're starting to elevate with a low, kind of higher low structure in here. Seems like there's a little bit of fear entering the bond market. Moving over to the AAII survey, you can see basically unchanged here from the previous. Neutrals got squeezed a little bit more bullishness, but basically unchanged. Kind of a neutral week overall. Still in that kind of topping pattern, and you can see very little movement, no new information here on this survey. Moving over to seasonality, we are still in a bullish period seasonally here. You can see through this week, pretty bullish all the way up until the kind of 22nd, 23rd time frame in here. And then you get a little bit of a pullback into the end of the month. So pretty bullish in here for that post-election year. Can be a little bit of a pullback for your regular years, and flat really from this time period up until the 23rd, 24th in here. So are we going to get a flat month or a slightly bullish month? I think we're still seeing a little bit more bullish price action, so that does fit with that post-election seasonality. Moving over to the seasonal calendar here, you can see bearish for that Tuesday, and October says ends the worst 6 months and NASDAQ worst 4 months, ending this week, and that is typically a bullish finish here. Tuesday, not great. FOMC minutes for the Wednesday. We'll see if we get any of that data coming this week that we didn't get last week. Could be interesting. And then Thursday, supposed to be a little bit more bullish. And then don't forget, the following week here is the third week options expiration. So you got that witching here, and then you have closed bond market on the Monday for Columbus Day. Moving over to the economic calendar, nothing scheduled here for the Monday. For the Tuesday, we got some FOMC members speaking. Consumer inflation expectations from the New York Fed. Expectation is 3.2. That's still just a little bit elevated. Atlanta Fed GDP revision. Want to see that still stay as strong as it is there. And then looking at Wednesday, you got FOMC minutes. That's really the only thing there. Thursday, Fed Powell speaking at 8:30 early. Continuing jobless claims potentially if we do get that data. 30-year bond auction, Fed balance sheet. And then for the Friday, are we going to get all of this data that we didn't get last week? It is scheduled here for this Friday, but that's not going to happen unless we get the government opening. So waiting to see if this data actually comes in this week. Moving over to Max Pain here. Max Pain is a little bit below price, but you can see there's a lot of puts in the market here. I like to see that 655. It is a little bit further below price than you would want to see. I'd want to see the puts closer to price if we were going to stay bullish here. Max Pain is 664, so that's about 1% down move potential. Bottom of the calls here around 559. That would be closer to 2% down move. Put call ratio is quite high though, so 3.2. At a 3.2, I don't expect markets to crater too far. So might see just a little bit of downside. I still think we might see a little bit of sell Monday, Tuesday, but I don't suspect that it's going to fall through the floor by any means. Moving over to the charts, looking at the S&Ps here, you can see it was up about 1%. Still looking for that upper trend line if we can get the continuation. The short time frames looked a little bit hesitant, but if we did get the continuation based on the weekly chart, that would give us about 3% or so of potential upside. That was the trend structure that gave us resistance last time, right? We grinded along that zone really from March of 24 up until November of 24. And then we started to separate here into the beginning of this year, and then we had that bigger pullback on the kind of tariff news, pulled back to very close to the highs from December of 21 before we got the continuation here so far. And everything does look pretty bullish except for the fact that we are super extended and the momentum is fading a little bit, right? So we're at a 70.86 on the weekly chart. You don't get that extended that often. You can see last time we got extended, we did have a lot of run before we saw a bigger pullback. You can see we hit extension here around a 70.5 in January, got continuation all the way through up until April, and then we had a couple of weeks of pullback back in that April timeframe after hitting a 78. Are we going to have that kind of a rip? Honestly, I don't think so. I don't think it's going to be that strong, but it's not impossible. I'm not saying that because we hit that RSI that we're going to turn back immediately, but just keep that in mind. And then looking at that daily chart here, you can see we did get the higher high setup. We did have the wick rejection on the Friday, did not look super great. Finishing flat, again, doesn't mean that we're going to pull back just super dramatically, but this was kind of a half-hearted move higher. It was a higher high. Are we going to see that wick rejection and then get the confirmation down on Monday? Momentum fading, RSI fading. You also have some divergence here as well. So again, definitely some short-term indicators that say this could be pulling back in the not too distant future, but the weekly chart still looks very bullish. Moving over to the Tasty charts here, you can see we are right on that upper ATR band. That ATR band continues to be overhead resistance. It has been over the last 3 weeks, and once again it was here on that Friday session. 670.57 was the high. We touched that zone, overthrew it, and then sold off. Again, just signaling that the upside potential here is pretty limited. And you can see what I was talking about before on those previous charts. You can get above it for a little bit, but you will pull back. And you can see that 3 weeks of pullback gave back all of these weeks of gains here, all the way back to that kind of early February candle, beginning of January candle. Gave it all back here in April before getting the continuation back to that upper ATR band. And then once we hit it again, we gave all of that back to that early April time period, again, rallying up from there. So if we saw something like that after hitting this, right, you would expect this to pull back kind of into this range. That's what I would be looking for, kind of in that 630 to kind of 632 area, giving back a lot of these most recent gains. And then looking at that daily chart, really no change to the structure here, still between the 8 EMA and that upper ATR band. Didn't quite make it to the upper band here, which is a little bit of a signal of weakness in my opinion. So you can see we hit the upper band and pulled back. Standard higher low setup continuation, but then we missed that upper band on the daily chart. Usually that's not great, right? You can see it here, hits the upper band, pulls back, rallies up to a slightly higher high, gets into this kind of same zone that we're in right here, and then we ended up pulling back to that 21 EMA. If we did pull back to that, that's kind of the 559, 560 area, signaling about 1.5% at least of pullback. Moving over to the NASDAQ. NASDAQ was up 1.15% on the week. Again, very similar thesis to the SPY charts. Continues to look fine. Still looking for a potential push to that upper trend line. If we did get there, that would be about 2.6%. But momentum is fading. RSI also overbought, just like the SPY charts. We're still well above the long-term trends here. Got into the zone, pulled back to that area, hesitated briefly, and now we're through it. Your upper target would be in that kind of 28,000 area, but of course we are looking at this shorter term structure to see if we can get that kind of 2% move here. And then looking at that Friday session, like I mentioned, down 0.42%. Again, clear divergence from this peak here, pulled back, got up to a higher price. RSI was at a 71.85 versus the 75.76. So lower RSI reading with a higher price, and now we're starting to pull back. So clear divergence, we'll see. Does this have a little bit more grind to the upside, or is this likely to pull back? I'm kind of in the pullback camp at this point. I think we'll probably see just a little bit more sells, and then maybe this ends up being a rising wedge style formation like this, and then we'll see, does it break structure from there, and that's kind of the final move, or is this going to pull back right now in this clear divergence that we already have? And then moving over to the Tasty charts here for the NASDAQ, basically identical to the SPY charts. You can see that upper ATR band continues to be resistance as it was 2 weeks ago, last week, and then this week, all in that same area at that upper ATR band right now. That is 606.35. Hit that zone. High of week was 607.33, so overthrew it and then pulled back down to 603.15. You can see the volume much less in this zone last week. Momentum continues to fade. Looks like we're going to get the cross here soon, and then suspect that that is likely to roll fairly soon. And then looking at that daily chart, again, same kind of thesis, overthrew that upper ATR band quite a lot, came up just a little bit short of it on the Thursday, and then sold off on the Friday. No volume there. Again, expecting this to pull back. Structurally, everything is still bullish, but you're just seeing that kind of fading price action here waiting to see what happens at these zones of support. Moving over to the Russell continues to be super strong. We did break out to a new all-time high close on a weekly chart above that 244.46 level, hit that upper trend line, and then rejected from there, right? So we hit that key point, marking a lot of tops in here, hit that zone again. Are we going to overthrow to this one? Just don't really see it happening. It's been super aggressive, basically straight up here for the last several weeks with very little pullbacks, and now we're basically overbought 69.46. I'm sure we hit overbought conditions at the peak of this candle on the RSI. Of course, we didn't close there, so you can't really see it on the RSI metric now, but at 69.46, you have to assume that we did see an overthrow of that level. And then here's what that looks like on that daily chart, right? We gapped and rallied. We expected to get a touch of that zone if we did break 244. Sure enough, we gapped through that area and rallied into the zone and then sold off from that trend line after the touch. Could just be an initial touch. I don't really believe that that's going to be the case, but it's not impossible. I think this is likely to be a wick rejection at a zone of resistance, and then we'll probably see just a little bit more pullback, kind of the same way that we're seeing on everything else. And you can still see that divergence here. RSI was at a 70.07 on the 18th of last month, and then you got higher prices here on a closing basis. RSI is at a 66.06. So again, clear divergence between price and relative strength. Moving over to the Tasty charts, again, same kind of thesis really as everything else. The last 3 weeks continuing to hit that upper ATR band. That is going to sit at 248.94 right now. Expect that to step up about $2, $2.50 or so each week as this continues to trend kind of on this trajectory here. So that would put you up around 250, 250.50 in that area, or about another 1% on a closing basis potential. But you can see that momentum continues to fade here on the volume weighted MACD. Got a volume spike. The next candle was a little bit of a sell at that peak level. So far, we've continued. Usually when you get volume spikes at zones of resistance, that will eventually be a turning point. And then looking at the daily chart briefly, same thesis really again. You can see very close to that upper ATR band here on the 18th, pulled back, hit the second band and rejected a little bit sooner than this previous iteration. And now that is showing a little bit of weakness. You can see the ATR bands and everything structurally still very much bullish, but showing that this is slowing here. You can even see it really going back to 22 August, hit that upper band, grinded higher, but now we've hesitated at the second band. I think this is likely to show just a little bit more hesitation Monday, Tuesday. Moving over to the Dow was up 1.13%, continues to look pretty strong here. Again, getting close to that trend line structure, continues to be a zone of resistance. Next week, that trend is going to be up around 447. So that does give you a fair amount of room here. You can see the volume continues to be really strong on the Dow. Good momentum here as well. Not quite overbought. So it's a little bit different than the rest of the charts. Continues to be very strong, well above these highs here. Continues to be consistently stronger. If it breaks out, you can look for the upper trend here around 490. I don't really suspect that's going to happen, but I do think we can probably get to this trend at some point up around 474. Moving over to the equal weighted S&Ps, these looked amazing here. We talked about this very long consolidation really since middle of August up until last week. About a month or so at this price action, really 6 weeks at this zone, and then you got a big push here this week. Momentum bullish, RSI bullish, big resumption. Seems like the rest of markets are starting to catch up, right? So you got the SPY and the NASDAQ looking a little bit more anemic, a little bit more like they're going to pull back. We'll look at the MAG 7 in a second. Does not look nearly as good, but you got everything else starting to play a little bit more catch up here. Big step to bullish from the equal weights. Moving over to SPY Russell and NASDAQ SPY here, you can see NASDAQ SPY definitely continues to hang in this area. I still think this is likely to be a double top in this zone. Can't seem to get above the high back here from August. Overthrew it briefly and then closed back below it. So tech not leading us higher, and then you got SPY underperforming the Russell. Continues to be the case. Continue to believe that is going to happen. You had a clear topping pattern here. Breakout down below the structure continues to go lower here. So again, rest of markets seem to be in a better place. Tech not as good, but still hanging in there. Moving over to the SPY divided by the M2 money supply, we did get above that level there, the 30.14 level. We are extremely close at this point to the all-time highs, up at 31.5. For the top of this kind of consolidation. You had a big wick high at that 32.71 area, but we are super high. SPX divided by M2 just continues to be really, really strong here and getting to very close to overbought conditions. Again, similar to everything else, this can absolutely hit overbought conditions and continue on, similar to what it did here. But eventually this will continue to fade and we will see a dip. You can see you got to oversold conditions there, was a buying opportunity. And then once again, overbought conditions likely to happen this week, 68.46. Can we push to the trend line here? Are we going to push to that peak level? I just don't suspect that it'll happen, but understand this is very bubble territory. This is the same levels that we saw during the dot-com bubble. Moving over to the Mag 7. Mag 7 had 2 bearish weeks in a row. Haven't seen that for a little bit now. Got it back here in August. Before that, we really hadn't seen 2 bearish weeks in a row on the Mag 7 since back here in March into the end of March, beginning of April time period. Now we've had 2 weeks of bearishness. Is this going to be the start of a bit of a topping pattern similar to this, where you get 2 weeks bearish, a little bit of choppy action, and then we start to let these EMAs and SMAs catch up, and then we start to break down from there? That would still give you plenty of time, a couple of weeks in this area before you get that kind of full topping pattern. But interesting, down 1.3% and then 1% respectively. 9 EMA, I would say, is within range. That is going to be about another 2% lower. Momentum fading, again, overbought condition, 74.55. We're right at the SMA, probably going to continue to sell at least a little bit into that area. Moving over to Apple and Microsoft. Apple was up 1%, right to that all-time high. Didn't quite touch it. You can see it back here. The high is that 260.10 level. 260.10 is the level. Didn't quite touch it. Got through the trend line, retested the trend line, continuation. I suspect that we're going to see a touch there. It's not quite overbought. And then looking at Microsoft, we thought we were going to get a push to the trend line here, and then we kind of pulled back on the Friday. It's still certainly possible that we do get the continuation to that trend structure and that this is going to be kind of a lower high setup ultimately, but getting a little bit of a push here, certainly a possibility, but Apple seems to be in a much more bullish place structurally. Moving over to Tesla and NVIDIA. Tesla had that big move and then outside reversal, down 2.4% on the week. Not great, right? We were hoping for a push into this area here around that trend line, around your all-time high. I just don't think we're going to get there at this point. We did get the numbers. They were really good numbers, but then they did pull back there. Momentum is still bullish. RSI definitely overbought last week, and then this week pulling back just a little bit. This is probably done, I would have to say at this point. I don't like it nearly as much. If you want to trade off the kind of 414.50 area, if we do come back down into there and then we get a bounce, that could be an interesting trade, but just doesn't seem like this is going to be the area. In my opinion, I think we'll probably pull back, maybe get a higher low setup and then see what happens after that. And then looking at NVIDIA here, loved this move, made a little bit of money on this move. I was a little disappointed that we pulled back so aggressively on the Friday, touched where I was looking at for my trailing stop, still made money, but I was hoping that this was going to hold up a little better, and then it did end up rallying a little bit into the end of the week, up 5.29%. So that was frustrating. I'm going to be watching this closely for a re-entry here. Momentum is bullish. RSI not quite overbought. Same kind of thesis of it as everything else though, right? You have a peak level here with RSI at a 73, and then you got another new high on price with a 70, with basically a 69 on RSI. So that's a little frustrating. I think this might end up being kind of a rising wedge pattern, but even in that rising wedge, this certainly could go higher, at least in the short term. Moving over to Meta and Alphabet. Meta was down 4.46%. We said this is a clear topping pattern. You had the midpoint here, broke out below the midpoint, momentum bearish, RSI bearish. I wouldn't touch this anytime soon here on Meta. I think this is probably going to go a fair amount. Last time we had a big breakdown structure like this, it went a lot. Obviously this was kind of the tariff play, but this looks like a top to me. I don't love it. You had 2 bearish weeks, retracement, clear RSI divergence. Everything says Meta probably not a good place to be in the short term. And then you got Alphabet, filled the gap, kind of filled the gap the previous week, definitely filled the gap this week. Momentum fading, RSI pulling back. It's kind of hard to work with these super extended candles. Obviously there is definitely a lot of bullishness behind Alphabet. That's why you get big up candles like this of 10%, absolutely massive when I was gone. And then you got the big continuation here. So there's a lot of buyers in here. You just have to consider the psychology of this, right? So there, it is super aggressive, definitely extended on a technical basis, but when you get moves like this, people just really start to love this stock, and then you have a lot of buyers come in with very minimal pullbacks, which is kind of what I think is going to happen on NVIDIA. We'll get a little bit of a pullback, but it won't be very much, and then we'll get a bigger continuation when markets start to resume a little bit of bullishness. So I think that'll probably be a very similar thesis on Alphabet. Moving over to Amazon and Broadcom. Amazon was down just 0.12 after having a pretty bad week the previous week of 5% down, broke this structure, pretty clear double top here for Amazon. You can see doesn't look great, hasn't really broken this kind of shorter term structure. You could argue this is that low, higher low here potentially, but you could also argue kind of low, lower low here. I don't love it, right? I think Amazon will probably go down to 212.25. I've been saying that for a little bit now. I think this could go even as low as 200 into this kind of trend structure here, or somewhere in here around 208. I just think this is probably going to go lower. I think this is a hesitation because we were a little extended to the downside. I would kind of steer clear of these for now unless you got a decent base on them on the short time frame, and then I would love to see it come into the level here, same way it did here. 212.25 is an important level, and I would like to see it come there, touch that level, find support, and kind of rally back out if it's going to do it. And then looking at Broadcom, 2 weeks of down move, slight up move this week, back to that kind of trend structure. Kind of similar to NVIDIA, big breakout here, slight pullback, look for that continuation. If it can hold these kind of gains, stay on this kind of trend structure in here. Next week, that trend's going to be around 341.10 or so. If it can hold that and then start to push, you could look for the previous high around kind of 365. And then that trend structure over the next couple weeks, somewhere in this kind of 416, 417 area. Moving over to staples and discretionary. Staples positive on the week, 0.09. Momentum still bearish, RSI still bearish. We're at a key level there, 77.50. Continues to be support. Came into this zone 2 weeks ago, and then last week hit that zone, looking to see what happens into next week. And then looking at discretionaries, this looks like a pretty clear double top to me at this point. High here in December of 24, high here again September of 25. Pretty clean. Still got gaps down here. Would be pretty crazy to see this come back and fill that gap, but not impossible. Certainly something to think about. If this breaks back below 235, I think there's going to be quite a lot of potential correction there. You can see trend structure, support level right in this area here. I think this probably goes down to 227 if that 235 breaks. If this trend structure continues to hold like it has so far, then you could start to look for a push to this structure up here around 250. I just don't believe that's really going to happen. Momentum's bearish, RSI breaking down from overbought conditions. Moving over to breadth. Breadth continues to improve here, and what I think is happening with this stronger breadth and with markets not giving as much gains on that kind of Thursday, Friday is because we're just seeing the Mag 7 weigh super heavy on stock market, right? So you have the Russell doing well, equal weights doing well, but the NASDAQ fading, Dow improved, Mag 7 selling on the week. So that's really what I think is happening here, right? So this is not showing catastrophe. The rest of stocks are playing a little bit of catch up, a little bit of breadth widening, but the Mag 7 is just so heavy that it's really tough for the stock market to regain that upwards momentum, even though everything else is pretty bullish. So structurally, really no changes here. We're in the same kind of trading range we've been on for breadth. And typically, I would say this is really, really bullish. But when you have the Mag 7 going bearish the way that it has the last 2 weeks, I think that's really going to start to weigh on the markets over the next week to 2 weeks. Moving over to 200-day breadth. This also looks relatively bullish here. You can see 2 weeks of bullishness. But again, you have a lower level here from that 18 August week. That was the kind of peak week that we were seeing on RSI. A little bit lower strength here on 200-day breadth. Very similar chart really to the RSI charts that we were seeing. So makes sense that this is starting to fade a little bit. Stock market going higher with breadth starting to generate a lower high structure here. Ultimately, I do think this is going to be kind of a top and a high, lower high structure here. Looking for a low, lower low structure in that kind of 54 area ultimately. Moving over to the dollar here, the dollar continues to hesitate in this same zone, closing kind of right on the low of this consolidation, momentum fading a little bit. The RSI, however, continues to find strength despite the price not really moving, which for me means this is going to be a base. Think this is going to rally out eventually. Sure is taking its sweet time. That 21 EMA still sitting as overhead resistance at 98.24. We'll see, can we get above that this week? This will continue to trend down. It's getting very, very close, right? Multiple tests here, multiple tests here. Eventually we're going to get above it. And I do think once we do, that's going to give us a lot of upside potential into this kind of 101 to 102 area. Moving over to bonds, JNK showing a lot of risk off this week, down 0.39%, breaking back below this structure here. Pretty big sell candle for JNK, right to that 9-week moving average, 21 EMA all the way down here around 96.75. Next support level, 96.50. Momentum fading, RSI dipping below the SMA. Everything here says this is probably going to pull back a little bit, and that's ominous for markets because of that kind of risk on, risk off nature. And then you can see TLT continues to find strength, positive on the week, above that support level. Want to see it continue here up to 92.82. I think that's definitely in play. And I think ultimately this could go back to that kind of 100 area. So it's kind of the long play. It's been a long play forever. I still think this is going to be super bullish over the next kind of 3 to 5 years, but in the medium term, I still think there's bullishness to be had. Moving over to the VIX, you can see that kind of rounding bottom here on the VIX. Momentum's moving to the bull side, bullish week for the VIX, up 8%. Next week, this is probably going to flip to bullish momentum, and then we're going to see what happens here. I think there's definitely some concerns underneath the hood that we're seeing starting to play out in the VIX. Big move down to the support area, finally hit it for a couple of weeks. Now we're starting to roll up here. What does that mean for markets? Like I said, this is likely to flip bullish on the MACD, and then we'll see what happens here. Last time this kind of flipped from kind of a long bearish period to bullish, you can see here, February 17th, got a big spike up to this 29 area, pulled back a couple of weeks, ultimately leading to that kind of tariff move here. I don't think we're going to see another tariff move without some kind of move in geopolitics or the political side, but there's definitely something happening here that markets are a little concerned about. Moving over to my accounts, I ended up net about $800 on the week. So pretty good week for me, especially just coming off of being gone for so long. Like to see that up a little bit over 0.5%. Didn't quite keep up with markets, but still pretty good on the week. In terms of positions, I still have that long dollar position. This has been a long position for me. I bought it a long time ago, and I still believe that it's going to work out over the next couple of months. But for now, still in a little bit of a losing position. Like I talked about pretty much all video, I think we're going to see some pullbacks over the next couple days. I don't necessarily think it's going to be the bigger down move that we will see eventually, but in the short term, I think there will be a little bit of bearishness early next week, and then we'll see what happens after that. Let me know down in the comments section what you think of the Finimize strategies. Are those strategies that appeal to you? What sectors are you looking at? What is your overall portfolio breakdown right now? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.